Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin. I am looking at Ford once again, and I'm honestly making this video because I need to buy this stock. When we look at what we have here in Ford, this looks like a fantastic setup longer term, and I'll give you a couple different reasons why. Number one, we have on the 1 day, 5 day, 15 day, and the most important, in my opinion, the 1 month, a positive rolling return. We are negative on the 3 month. We are nearly break even on the 6 month. We are pretty much break even here on the 1 year, which shows me that either we have bottomed or this stock will never go anywhere ever at any time because it's barely up. It's not even up 1% over the rolling 1 year. The thing that I really want to point out for Ford is that this high correlation to the dollar. It's got a 67.6% correlation to the dollar. And if you've been looking at the dollar recently, which I have been because it's one of the most important keys to the entire macro world, the dollar's been doing nothing except for going directly up and to the right. And if you want to actually honestly think about one of the things that's most important here is, I'm going to go completely off kilter here where I normally don't do. We're going to look at the euro. I want to look at the euro versus the USD. The reason why is because the euro versus the USD looks like it's getting clobbered right now. It's absolutely going short in the longer term. If we look at the daily here on the euro USD, it's essentially been a go short, and it's been on a negative 1 month rolling return, which again, I call that out because that's very important, since July of 2023. Now, this weighting here, the euro, is one of the heaviest weightings when you think about actually looking at what you're going to get for the actual dollar itself. So now that we're looking at the dollar, you can see we've got this correlation specifically to the euro USD right here. It's got a negative 65% because obviously half of that is the dollar, which means that essentially 65% of the move that you see in the euro will be reflected in the dollar. Now, if we go back to Ford, and we'll keep on there with that correlation to the euro USD, this is going to let us know very quickly with a very high inverse correlation. Do you see that? So it has a very high inverse correlation to the euro USD, which looks like it's on a go short right now. It's got a very high correlation to the UUP, which is the bullish dollar. So it's got a very high correlation essentially to currency trades. So we look at Ford right now with the type of moves that we're seeing and the type of growth that we're, or not growth, the bullishness we're seeing in the dollar. It leads me to believe that Ford is at least going to be some sort of defensive catalyst through whatever material event that we're probably going to go through that's making so the dollar is rising. We look at the past month here, essentially from the first of September. We haven't really gone anywhere. I'll be honest about that. We really have not gone anywhere. We were at $12.14 at the beginning of the month. We're at $12.58. The only thing that we have done is not lose money, which in a market that was down, if I'm thinking about the S&P 500 today, actually nothing was really down. It looked like it was down, but it ended up. If we think about the market, this is actually not a bad place to be while things are essentially kind of sorting themselves out. We are positive on the 1 day, 5 day, 15 day, 1 month. Again, on the long signals, we do have a go short that just expired in the short term, intermediate term, and longer term, but there is no go short signals yet. We still see bullishness on the short term and intermediate term. We do want to see it on the short term. It needs to flip because 2 days in a row, I'd really believe here. We want to see the bullishness continue, and the bullishness is continuing on the longer term. Now, if we look at the rising bull, what I do love here is that this factor, essentially the 2 day rolling average of bullishness was so negative on the 2 day, the rolling 5 day, and the 10 day. That's more of an average of the bullishness. When we look now, we've got a rising bull. The only concern you may have is that you're probably peaking a little bit, but again, you're not too high. You're only at 55% bullishness. If we look here at the trading signals for Ford, there would be an argument to say that the best setup is probably behind it to a certain extent. The 13th looks like one of the greatest days. The rising value, though, the coming rising bull, the big bull, the small bull, the swift bull, all these things are signals that mean something to me. And when I think about the swift bull, one of the things that I want to call out, the swift bull matters to me specifically because it's a setup of the weekly. So if we look, this is going to be based off of the previous week and it flipping bullish. So what we're going to say is, first off, we know that it flipped bullish here. So what we're saying is that this is 2 bulls. So we know this is bullish here. It requires that for the swift bull. Then if we go back to the weekly, we're going to see that on the 9/15 week, what we can see essentially here is that we were already bullish on the longer term. So because we were bullish on the longer term and we got the setup again on the daily, that is a swift bull. That is a double confirmation to me that you have longer term trends which are positive, and then you get a flip on the daily. It's a great indication of better things to come. Now, if we look at the Ford daily chart right now, we can see obviously it's been up, it's been low, it's been low, but we can see that there is at least some momentum if we're looking at the underlying stuff. The daily sentiment indicator definitely shows the bullishness returning. We can see the volume, while it isn't necessarily great, it is rising and getting higher. You can see the red line is rising and getting higher, while the price is at least stabilizing. If we look here at the daily forward volatility, essentially we can see that the volatility is starting to break out. The correlation is still negative, but it is starting to rise to a certain extent. The blue lines are above that red moving average, which is the 15-day moving average of the volatility. To the light, it's nice to see that the volatility is breaking out. We'd actually like to see it break out even more. That means the price would probably gap up even higher. We'd like to see the volatility is pretty tight. Like we would expect a big move, very similar to what we got back here in May. You can expect a big move in one direction, and that'll continue on for a little while. So you'll want to buy whatever potential breakout or breakdown we see from this level. The volatility really gets tight. You can see on the ultra fast sentiment indicator, again, we're in the mid 50s, nothing really bad there. So I'm interested in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, subscribe to the New High newsletter. We give you 25 stocks to your inbox every single Sunday. Stocks between $5 and $20 that are breaking out. Stocks breaking out to 1-year highs. Stocks breaking out to 52-week highs. It is a great list to get your trading started. I'll talk to you soon.